Why are insurance companies so shady? Functions of property casualty insurance. Our society could hardly function without insurance. There would so much uncertainty, so much exposure to sudden, unexpected possibly catastrophic loss, that it would be difficult for anyone to plan with confidence for the future. Most importantly, it would be difficult to obtain credit or financing since few lenders or investors would be willing to risk funds without a guarantee of safety for their investments. Purpose of insurance. Technically, the basic function of property casualty insurance is the transfer of risk. Its aim is to reduce financial uncertainty and make accidental loss manageable. It does this substituting payment of a small, known fee, an insurance premium, to a professional insurer in exchange for the assumption of the risk a large loss, and a promise to pay in the event of such a loss. Spreading the risk. Transfer of risk also is referred to as spreading the risk, because the large losses of a few are distributed through an insurer to a large number of premium payers, each of whom pays a relatively small amount. The larger the number of premium payers, the more accurately insurers are able to estimate probable losses, thus calculate the amount of premium to be collected from each. Because loss incidents may change, insurers are in a constant process of collecting loss experience as a basis for periodic reviews of premium needs. How insurance benefits society. As an additional benefit to society, insurers themselves, the trustees of policyholder and stockholder funds, become major investors and suppliers of capital to the economy. In this respect, insurers perform a capital formation function similar to that of banks. Thus, business enterprises obtain a double benefit from insurance. They are enabled to operate by transferring potentially crippling risk, and they also may obtain capital funds from insurers through the sale of stocks and bonds, for example, in which insurers invest funds. Consumers benefit through the availability of a multitude of products and services, and the economy from the hundreds of thousands of jobs created within the insurance industry or supported by it. For more on the insurance industry's contributions to society and the economy, see Get It? I develop insurance products. And with great shame I acknowledge that all insurance companies are shady. Sean clearly pointed out that this reduces cost. But there is more. See, insurance is complicated. Especially living benefits like health, critical illness, etc. And it is sold, not bought. If you make the product simple, there is no differentiation from competition. So agents like bells and whistles. The more you add, more complex it becomes. But it allows agents to market such products as superior. So we make complicated products that look superior but behind have a lot of controls like, this is not covered, that is not covered, and so on. This helps us keep price down, makes products look superior, agent happy. Take any critical illness policy in the market, JT will cover heart attack. But did you know that there is a definition of heart attack in the contract which no one reads? For example, one of the condition of heart attack is changes in ECG. Not all heart attack result in this. Sometimes we see cases which are but without ECG changes, insurer is not liable to pay. There goes your hard-earned money you paid in premiums for toss. Lot of this is related to the purchase process. If we are able to find a way in which insurance is bought and not sold, you would start seeing simpler products. Customers would understand what they are buying and make the industry less shady. Insurance companies aren't generally shady. They are governed by each state's insurance commission, and if they can't comply with state laws, then they lose their ability to sell insurance products in that state. The difficulty is that insurance companies write complex policies, so they can tightly manage their numbers. Insurance is strictly a numbers game. They have vast amounts of data and know exactly what they can expect to pay for claims, and can price their policy premiums accordingly. Then they hold you exactly to the terms of your policy. Insurance companies seem shady because they pay exactly what their policy obligates them to pay. Anything that is not specifically covered is denied, and we all know that life is anything but exact and specific. The insurer's whole goal is to find any aspect of your claim that deviates from the coverage you have purchased. If they did otherwise, insurance companies would have to charge vastly higher premiums, or go out of business. Insurance is a business like Apple or GE. The C-suite folks have a legal, fiduciary duty to the owners, shareholders to maximize shareholder value, make as much money as possible. To do that they have to have as many paying covered lives as possible, look at all the commercials. At the same time they have to minimize their expenses by using legalese fine print on page 265 out of the 989-page contract to deny as many claims as possible. At the very least they try to drag out payments for as long as possible. Sometimes they overdo it and a state insurance commission fines them some money. At other times they lose a class action suit and have to pay more. It's all part of doing business for them. The shady part, especially with health insurance, is that delaying an MRI will save them money even if a delayed diagnosis may cost someone their life. They couldn't care less and just look at the bottom line.